Hello, property nomads. Hope you're well. We've got two articles to go through, both from mainstream media, both from UK papers. And they are looking at the mortgage market. They're looking at the fact that default rates on mortgages and credit cards are supposedly set to increase. This is what lenders are predicting. And it's a bit of a no-brainer, really, when we think about it. And we've got to look at why are more people struggling. Not just globally. Let's focus on close to home. Let's focus on England. Why are more people struggling? Well, interest rates have gone up quite considerably. There was 14 consecutive increases between November 21 and September or the summer of 2023. So the rates have gone up from 0.1% to 5.25%. Fuel has increased as well, quite considerably over the last 3 or 4 years for various reasons. So especially if you're a driver, you're getting screwed at the pump. If you're a driver and you're a homeowner, you're getting screwed at the pump, and you probably find that your mortgage rate is substantially increased. And by the way, if you listen to this and you haven't got a mortgage, or you're locked onto a very, very low mortgage for a long time, then congratulations to you. Obviously, you're not in the same position as most people. And then also from a driving point of view, councils are now becoming cash tight, or even more so. So you're getting screwed by, maybe an ultra low emission zone. Maybe you're getting screwed by your council taking away free parking. Maybe parking costs have increased. Maybe the cost of food has increased quite considerably as well. Maybe car insurance. All of these sorts of things are starting to build up. They have been building up for the last few years. And what's happening is that people have been moving over to credit cards to either finance their life, or maybe just to buy groceries, or go to the supermarket. And that's really is a sad state of affairs. So this article's from the Independent. So this is what they're saying. They're predicting fourth quarter for small firms is going to be quite bad. Unlikely to be changes for big businesses, but it's more the smaller firms that are going to take a hit. I'm not surprised. The government, literally, they're beating landlords with any stick possible. They're making things already very, very difficult in the property sector itself, and then on top of that, if you're trying to refinance your portfolio, or you're just unlucky if you're trying to refinance it this time, then your operational costs are going to be a lot higher. Gas costs are up, electricity costs are up, and it's all down to the way that government have reacted to certain things in the last few years as well. So really, it's like London buses, except rather than having 2 come at once, it's like 25 things come at once. So that is not ideal. Over the past 3 months, default rates for credit cards have slightly decreased. And of course, absolutely. And default rates for other non-mortgage loans increased. Again, banks will look to screw you in every single way possible. So not surprised. Default rates for credit cards and other loans were both expected to increase by the end of November. Again, not surprised by this at all, for every reason we just said at the start of the video. Transaction activity in the property market is slowing. That's what our other article is going to look at. And people are really putting off refinancing if they can afford to do so. Again, absolutely fine. I don't think interest rates are going to come down anytime soon. Again, we've just got to accept this is where we are. This is what's going on. It's going to be about 5%. And that's the Bank of England average rate since 1694. So there you are. It's just a case that it's where it's gone up so much in the last couple of years. It's probably taken people by surprise. Of course, if you listen to Property Nomads podcast, or indeed this YouTube video, you know that we've been saying it for a year or two now, that interest rates would increase quite significantly. And so too inflation. So I'm going to blow my own trumpet on that. So make sure you subscribe to the podcast, iTunes, Spotify, whatever it might be. And if you're on YouTube, subscribe to the channel, use that notification bell when possible. That means you get alerted when there's new content. They speak to people with various mortgage companies. Obviously, I'm not going to go through that. Listen to the episodes with Mark Champ of Wolf Financial. We work closely with Mark, and the monthly episodes we do have always got a fantastic insight as well. So basically, this article, in a nutshell, what's going to happen and what's predicted to happen is that default rates of mortgages and credit cards are set to increase. That's what lenders are predicting, and I would categorically agree with that 100%. Quickly popping over to our other article. So again, this is stuff that we've covered on the podcast before, and we've covered on the YouTube channel before, and I'm going to try not to do as many videos on it because it's just like repeating the same message time and time again. And I'm not going to try and repeat the same message, but put a different spin on it, because that's not genuine content. So this might be one of the last ones we cover for a while. Apparently, the UK property market is stuck as mortgage rates remain at historic lows. But that's a bit of an odd headline, to be honest. Really is a very odd headline. So that's what I'd say categorically number one about that. So according to this, prospective buyers' ability to afford a mortgage is still impacting the housing market, but the outlook for next year seems more stable, according to experts. I don't know about that. Ability to afford a mortgage is still impacting the housing market. Yes, totally agree with that. Outlook for next year seems more stable. I'm not convinced about that. I think the proverbial is going to hit the fan astronomically next year. So watch this space. The RICS, which is Royal Institution of Chartered Surveyors, has revealed that nearly all parts of the UK have seen house prices drop due to ongoing issues with affordability. Yeah, absolutely. Not a surprise. Again, we've covered this before numerous times on the YouTube channel and the podcast. So the September report shows a tough environment, interest rates impacting mortgage affordability, understandably so. And this is coupled with a growing gap between limited rental supply and increasing demand, which is causing rents to rise. Now, I'm glad that they've said that, because that's exactly what's happening. And secondly, they're not just trying to throw landlords under the bus. It's simple supply and demand, as we said before. More surveyors have reported a decrease in new buyer inquiries. Again, that's understandable. 30% more property professionals reported a drop in agreed sales. Yeah, absolutely. What I would say, though, is if they're looking from a September report, the September report might be taking data from August, and August is normally quite a slow month anyway, because people are on holiday, people are doing bits and pieces in and around the home, or they're taking their family away, whatever it might be. So I would say that that's my caveat on this particular article. The article goes on, says next 3 months expect a decline in sales volumes, and that is pretty much that. Again, I'm not surprised by this. It's completely understandable. It is what it is, and there's a lot of economic factors that are playing their part, and it is why the market has been, in my opinion, declining, but they're reporting it as stuck. It goes on to say that rental market is seeing an increase in demand, so higher demand, less supply, that's going to lead to higher prices. I'll give them that, because they're actually being quite balanced on that. Other people would just shove landlords under the bus and say, "Oh, the greedy capitalists right-wing pigs." That's not the case for the most of us. Hey ho, it is what it is. So yeah, what's going to happen here? Well, I would imagine that the market might be stuck for a little while. I certainly expect the market to go down considerably before it gets better. And as we said time and time again, that means there's going to be opportunity. So always be on the lookout for opportunity. Be on the lookout for, a lot of people I speak to are just sitting on cash at the moment. They're waiting. They're ready to pounce at the next available opportunity. I think that's going to be next year, quite possibly in the commercial sector itself. That's why there's plans in place to change the permitted development rights, to tweak them slightly. And again, with the refinancing of a lot of loans commercially in the UK are coming up in the next year or two, that's going to create a lot of opportunity. So there's always going to be opportunity. I'm not surprised by anything we've just gone through in those two articles. What I'm going to do moving forward on the channel and the podcast as well is I'm not going to try and just create a new spin on the same thing. Otherwise, it gets monotonous for you, it gets monotonous for myself. We're here to try and push as much new and great content as possible, and with your help by supporting the podcast, supporting the YouTube channel, subscribing to both of them, telling other people about them as well. That really does help us to grow, and helps to get the message out there to more people. So thank you in advance for subscribing. Thank you in advance for sharing the content as well. And we'll see you in the next video.